Are you slightly surprised by the market reaction, the fact that you've got a share buyback, second quarter beat, but the third quarter seems to have shaken them?
Well, we thought that we had a very good quarter and gave very good guidance for the year. We had, for the second quarter, reported 23% revenue growth and 28% EPS growth. And to your point, we also announced a $10 billion share buyback. For the back half of the year, we actually increased our revenue guidance by $100 million and increased our EPS guidance by 1 cent, showing the momentum in the business. And we're pleased with the progress that we're making. I think the quarterization of that is maybe a little bit misaligned with what Wall Street expects, and that's perhaps why you're seeing what you're seeing in the stock.
Are you concerned by Wall Street in general at the moment, John? I mean, what a day, a record-breaking day in terms of the move we've seen on Facebook. Do you think the market valuations, I mean, you've yourself seen your share price up about 80% last year, up about 24% so far in 2018. Does it just make it harder and harder to live up to these sorts of expectations?
Well, I can't predict what Wall Street is going to do or the stock price reactions. What I can do is focus on what we control at PayPal, and that's growing digital payments. We're growing at a rate that is 25 to 30% year on year, and you're seeing a lot of interest in digital payments and fintech in general because of the way that people are changing the way that they move and manage money. We're positioned very well at PayPal with having a two-sided network with almost 250 million customers on one side and 20 million merchants on the other, and I think that's why you see a lot of interest in our stock.
John, I mean, I'll dig into your numbers in just a moment, but you're sat in San Francisco. Facebook in times is a frenemy. You've sometimes been competitors and sometimes joined with them. Does it worry you by what's happened in the terms of their share price today?
Well, I can't speak to Facebook. What I can tell you is that we do partner with a lot of technology platforms and marketplaces. One of the things that we've done, we pivoted a couple years ago to where we have an open digital payments platform. And doing that, we want to partner with companies like Facebook and many other large technology platforms. But I can't speak to what's happening with Facebook.
You want to partner, you also want to buy. You're still saying that you're acquisitive. I saw you buy a pin-up of European fintech, iZettle, in the previous quarter, and you're still on the hunt for acquisitions. Where would be best place to invest at the moment, John?
Yeah, so our capital allocation strategy sort of has three pillars. One is investing organically, internally. Another is returning cash to shareholders. And lastly, going out and acquiring companies for growth. We've had pretty busy last quarter where we announced 4 acquisitions. And these are all acquisitions that really help the merchant side of our platform. And we want to be balanced and also focus on the consumer side. So as we look at opportunities around the world to go acquire different companies for growth, we want to make sure that we're continuing to offer capabilities that are very complementary to our platform for merchants. Things like risk as a service or payouts, which are things that the companies that we acquire do. At the same point in time, we want to make sure that we're going out and providing a consumer offering on the customer side that is very appealing to them and continues to provide services like our one-touch technology where they have a frictionless checkout.
Does it frustrate you at all when you're looking at merchants, when you're looking at, it's still 20% of online sales? I mean, do you need to get in with a partnership with Amazon? Would that occur? What's been delaying it?
Well, we'd love to partner with every large company in the world. As we look at the opportunities for growth around the world, one of the things that's very obvious to us is that we're underpenetrated in many markets internationally. We happen to have a very strong presence in the UK, but there are probably 5 or 6 core markets where we have our full suite of products rolled out. What we're very focused on is increasing our penetration among the digital users in some of these large international markets like in India or China or Mexico or Brazil.
International is a key focus. What also about the app, of course, Venmo? There was some concern about the slowing growth rate. I mean, the growth rate's still pretty stellar and you're looking at 78%, but it has been slowing. How do you want to see Venmo continue to progress? And indeed, how do you start to make it more revenue generating?
Yeah, so Venmo actually had its best quarter for growth in terms of net new customers that we've ever had. We added more Venmo customers to our platform than we ever had before. If we look at our total payment volume, the annual run rate right now for Venmo is around $60 billion of TPV, of total payment volume. and that grew 78% in the last quarter. There are very few companies that I'm aware of that have that amount of payment volume that are growing at that rate. But to your point, one of the things that we're very focused on is monetizing Venmo. Today, Venmo is largely a P2P or a peer-to-peer application where you might be exchanging money with a friend or someone in your network. What we want to do and what we've moved towards in the last part of last year is to allow our Venmo customers to actually go shop at merchants. And that's very appealing to merchants because of the social aspect of this platform. It's akin to free advertising for them.